Hi, and welcome to the HodlBoomer podcast, the Bitcoin podcast for seekers. They could be old seekers, like myself and my brother, or quite a bit younger, but people who are interested in the facts around Bitcoin. Not into the hype, not into I'm going to get rich quick, just the facts. Right now, Bitcoin is at about $75,000. No, gosh, it's up to $80,000. It was $126,000 about 6 months ago. And 2 weeks ago, the fear and greed index, which we'll look at in a minute, was kind of at extreme fear. Today, the index has recovered 10 points or so and is approaching the neutral territory. We'll go into what that means. So what do people say about Bitcoin? Well, they're nervous. They say, I don't want to get in it. I've missed it. I've missed the wide increases. I don't want to get into it. I'm going to answer that question and three more objections that are real objections and keep good people on the sidelines. Because here's what I've come to believe. The objections are not wrong. Those fears are real. They're just aimed at the wrong question. So what are they? One, I'm too late. We already talked about that a little bit. Two, the volatility, the up and down scares me. It's unlike tech stocks. Three, tech stocks beat Bitcoin badly in 2025. So why bother investing in Bitcoin? And four, self-custody is way too hard for me. I like the idea of sovereignty, but I don't like the idea of taking care of my own money. Think about that. We're going to cover all four of these because they're honest objections. They deserve answers, not to be dismissed, not to be hyped through. They just need to be dealt with. Let me give a brief shout out, if I can, to hodlandtees.org. Hodlandtees is really who sponsors this program. If you go there, you will see several things. Right now, the Bitcoin price is at $79,000. The market cap is 1.58 trillion, and you can trade $1 today for 1,266 sats. Other tools very, very quickly. You can find this podcast there. You can find our writings and other people's writings about Bitcoin. And of course, you can find our t-shirts and find our caps and help to support this channel. So we would appreciate that very, very much if you would jump over there. We'd also appreciate it if you could like and subscribe and help get this word out to more people. I missed making money on Bitcoin. You're asking the wrong question. We'll go more into that in a minute. Two, the volatility scares me. Three, tech stocks do better. And four, self-custody is too hard for me. Let's cover the first one, I'm too late. Bitcoin hit an all-time high at $126,000 last October, and then we all know it pulled back, and 2025 was a tough year. 2026 is starting off slow. The real objection here is I made a decision, maybe when Bitcoin was around $100,000, to invest to make money. That's the problem. If you invested in Bitcoin to make money, you did something wrong. It's not a stock. You don't put your hard-earned dollars into Bitcoin in order to make a return in US dollars. That's the wrong thinking. The right thinking is the US dollar is failing. It's failing miserably. It's going to enter into, as Larry Lepard calls, the big print very soon. They're going to print more money without anything behind it. And inflation is still running wild. You guys know it costs more to live than it did 3 years ago. They're saying inflation is at roughly 2%. So the fiat dollar is decreasing in value, where Bitcoin is actually more stable in value. We'll talk about that in a minute. People have said they were too late forever. They said it when Bitcoin was at 100. They said it when it was at 1,000. They said it at 10,000, at 50,000. If you look at Bitcoin's 5-year return, it's at 121%. The S&P 500 was at 81% over the same time period, even after the 2025 correction. Since 2012, the S&P has lost 99.8% of all of its value when measured against Bitcoin. What do I mean by that? Instead of measuring the S&P 500 by fiat dollars, by that failed money, measure it by Bitcoin. The question isn't whether or not you're too late. The question is whether or not you believe in the Bitcoin transition. If you believe the money, the movement to sound money is complete, it's over with, there's no more going to come behind it, then I might feel like you do. But I know darn well that Bitcoin is on the increase and forever. And only 5% of the people in the world are invested in, if you'll pardon the expression, Bitcoin. If the case for sound money holds, and it does, then the migration to Bitcoin has barely even started. Let's talk about that a little bit further. If you ask the wrong question, and the wrong question is, can I get into Bitcoin now and can I make money? By making money, I define that as US dollars. You're not investing in Bitcoin in order to become sovereign. You're investing in Bitcoin in order to make a return on your dollars. If that's your goal, thanks for watching the podcast, but you can go away now. Because that's not what we're talking about. We're talking about real wealth, taking advantage of the world's only sound money and being a part of that. So if we're talking about being too late to enter into sovereignty, that's not a true statement. We can't be too late to enter into the new financial system. You don't ask if it's too late to stop smoking. You don't ask if it's too late to eat better food. Why would you ask if it was too late to move on to sovereign money, which is going to happen next? So the question isn't, is my timing right? The question is, do I believe in Bitcoin? Do I understand the technicals behind Bitcoin? Do I understand what it really is? And let me give you a quick aside. Bitcoin is the only cryptocurrency that really makes sense. The ETFs, they're just paper Bitcoin. They're just paper Bitcoin. So invest in the real thing and you will become sovereign. Let me jump back in. In March of 2020, Bitcoin was at $4,900. That wasn't that long ago. Fear and greed was at 8, pretty low. The too late crowd, the people that said, "Oh gosh, I'm too late. I'm not going to make a big increase." They missed a 133% increase in 6 months. In November 22, the FTX collapse happened. You might remember that. Bitcoin went all the way down to $16,000. The Fear and Greed Index was at 6% then. They missed an 88% increase in 6 months. April of 2026, this month, it dropped to 66,000. Fear and Greed Index hit extreme fear, down in those single digits. And weeks later, it's up again at 80. Now, honestly, we don't know what's next. We have no idea. But the pattern is clear. The best time to start in Bitcoin is always during extreme fear. If you remember that chart, it's kind of over to the left. The second best time is today. So let me jump up and show you that chart again to make sure that we know what we're talking about. If you invest anywhere down here, you're pretty smart because it's going to go back up. When the normal population begins to look at it as, gee, let me throw some dollars in that, I can make a nice return, and then I can turn them back in for more dollars. That's what's happening when this thing moves up into the green. Right now it's at 32. It's still a very, very good time to buy. Great time to invest in Bitcoin. And I keep using the term invest. I don't mean to. I'm defining it differently. You don't invest in Bitcoin expecting a return. We invest in Bitcoin because we're transitioning to a sound money. So really, it's about becoming sovereign. So what are some of you thinking? You're thinking, well, gee, last time I got excited about this when Bitcoin was really on a tear. It was over $100,000, and I bought some because it looked like it was going to go up forever, which is what Bitcoiners say, right? It's going to go up forever. But it doesn't go up forever in the immediate. It goes up forever over time. So there's a lot of people who are kind of feeling like they need to cash out so they can pay their mortgage, so they can buy food. If you need to do that, if you need to get back out because you've got to meet your expenses, that's the emotional weight's got to be huge. And we would say, go ahead, cash out. But if you're looking at cashing out and you haven't really considered how to reduce your expenses so that you can hang on and maintain your Bitcoin, you might think about that first. You need to think about what your motive was investing in Bitcoin in the first place. If it was to make money, to turn it into more US dollars, that's a different question than stewardship and becoming sovereign. If you bought Bitcoin because you truly believe the fiat dollar is broken and sound money matters, then the price is just noise. The volatility isn't a flaw in Bitcoin. It's the price of exit from a controlled system. You're not investing for a return. You're positioning yourself in the money of the future. But let me say it clearly again. If you have to get out, if you genuinely need the money, you got in from an investor, pure investor point of view, to turn it into more US dollars. It means that you might have gotten in for the wrong reason and you need to free up that capital, and that's fine. But you need to check and make sure whether or not it's just fear talking, and then stop and ask, what am I getting back into if I get out of Bitcoin? You're not going from volatility to safety. You're going from sound money, from good money, back into fiat, which loses, by some estimates, 6 to 8% of purchasing power every year by design. Some people say a lot more than that. So the volatility of Bitcoin goes up and down over time, jumps up, jumps down. It's not a straight line from a little to a lot. But the debasement of fiat currency, what's happening to the dollar now, it only goes in one direction. It only goes down. A lot of the stress you're feeling is because you're trying to time the market, and that's just silly. Selling Bitcoin back into dollars is not de-risking. It's not reducing your risk. It's trading one risk for a slower, quieter, guaranteed risk. Let's talk about the 4-year horizon, because it's kind of a pattern that people talk about in Bitcoin, and it's repetitive. It does happen. Bitcoin has never had a 4-year period with negative return. Let me say that again. There's never been a 4-year period where people invested in Bitcoin and had less 4 years later. Every 4 years, there's higher lows and higher highs. The halvings, and just let me explain that quickly. Bitcoin miners are paid a reward when they do the math work with these incredible computers, and they discover a Bitcoin. They're paid 3.125 right now. When the halving happens, the reward will be less than that. So there's a timing that matters. It happens. The adoption curve matters. So if you can't stomach every 4 years a 40% drawdown, and I'm being aggressive on purpose, your position size is wrong. It's not that the asset is wrong. You need to do what's practical. And that's one way, is dollar cost averaging. What that means is I'm not going to worry about buying at the bottom or buying at the top. I'm just going to buy. Every time that I have a little bit of extra money, I'm going to buy. Every dip then becomes a feature, something that you can take advantage of. not a failure. So let's think carefully about that dollar cost average. Buy a little bit. If I wash my car every week, that's $30. If I just get soap and water and wash it myself in the driveway, that's $30. I can dollar cost average into Bitcoin. If you put $30 into Bitcoin every week, you're on your way to serenity, truly, because Bitcoin is going to increase. Remember, only 5% of the people in the world are invested in Bitcoin right now. Let's talk about the second objection, because I think we've covered this one well. Tech stocks have outperformed Bitcoin. Why would I invest in Bitcoin? Well, you would invest in Bitcoin if you were looking for a fiat dollar return. We're trying not to say investing anymore. We're trying to say moving into Bitcoin to become sovereign. Let's talk about 2025. The S&P 500 returned 17.8% versus Bitcoin's underperformance by 19 points. That's the first time it's happened since 2014, and it got a lot of people pretty frightened. AI stocks drove this increase. Alphabet returned 65.8%, Nvidia returned 40.9%, the Mag 7, Magnificent 7, the 7 stocks to watch, they returned 27.5%. Bitcoin, on the other hand, hit an all-time high in October of last year, and then it pulled back 30% by year end to $81,000, $91,000, somewhere in there. So yes, absolutely. On a calendar year basis, when compared to fiat dollars, 2025 was a good year for tech stocks and a tough year for Bitcoin. It's just facts. But here's what the headline doesn't tell you. When measured in Bitcoin, rather than the dollar, the S&P 500 was down 15% in 2025. So since 2012, the S&P 500 has lost 99.98% of its value when measured in Bitcoin. Over a 5-year period, 2021 to 2026, Bitcoin was up 121%. The S&P was up 81%. Who won? Bitcoin's compound annual growth rate, CAGR, was 94% for the past 10 years. The S&P's 500 historical average, about 10%. So one calendar year of underperformance when compared to the US dollar doesn't eliminate a decade-long trend. Bitcoin is fundamentally different. So you compare Bitcoin to tech stocks is comparing two fundamentally different things. Tech stocks are nothing but equity claims on companies. They're valuable, certainly, but they're dependent on a lot of variables: management, regulation, competition. Bitcoin, on the other hand, is not an equity. It's the base layer of a brand new monetary system. Not 5 years old, not 10 years old, 15 years old, and it's real. It's absolute. There are brilliant people that are investing in Bitcoin. I said it again, brilliant people transitioning to Bitcoin. To put it in another way, you don't compare gold to Apple stock. You don't ask whether gold beat a certain tech stock and then sell your gold. The question isn't which returned more last year. The question really is, what's money? And how do I get more of solid money, sound money? While retail, for example, ask, did Bitcoin beat tech stocks? Some of you are asking that question and you're excited about your tech stocks. While you were doing that, really smart people, institutions, they quietly bought $921 million of Bitcoin ETFs in 5 days. Whales accumulated 270,000 Bitcoin in the past 30 days during extreme fear on the chart. The Bitcoin exchanges, people you hear about, Coinbase, they're at a 7-year low in terms of Bitcoin available to sell to people. What does this mean? This means the long-term holders are not selling anymore. It means that the smart money doesn't watch as a 1-year scorecard or scoreboard. They're positioning for a decade or more. That's important. Let's talk about the fourth objection. Bitcoin is way too hard. I don't trust myself to manage my own money. What do you want me to put value under the mattress? No, that's not the case, but I do understand the objection. Self-custody requires new skills, seed phrases, hardware wallets, verification, backups, all of these things. For a generation like mine, raised on banks and raised on technology increasing in banks. I mean, I remember the credit cards that were the old knuckle slammer. You literally took a credit card, put it in this machine, and ran a mimeograph over it and busted your knuckles. Years later, it's selling it or paying for things with an app on my phone, all electronic. See, you're kind of in electronic money anyway. You just don't really realize it because banks have taken care of it all. And there are profit centers in those banks for credit cards and debit cards and all those things. So for a generation raised on banks, it's kind of hard to take your money back into your own self-custody. It's a real barrier. It's not an excuse. So we're not going to pretend it's trivial, but we are going to talk about what it actually involves. Hate to say this, but my honest take is that if you don't move into the new money and you don't learn self-custody and hardware wallets, air-gapped hardware wallets, then have fun staying poor. I don't mean that as an insult. It just means that things are moving and things are moving kind of quickly. So I'll say this in love. The world is changing. New skills are required. It isn't optional for your kids. They're going to learn this stuff because the world will be run this way. Previous generations, ones maybe mine, maybe before mine, learned to drive. We learned to use ATMs. We learned to do online banking. Do you ever go to your branch bank anymore? Probably not. This is just the next generation of money. It's the next step of money. So if you can operate a smartphone, and most of you have them and know how to use them, you can learn how to use a hardware wallet. It's really not that tough. So how do you get started? Well, we mentioned this before. We'll mention it again next week in a little bit more detail. First, you buy a small amount of Bitcoin on a reputable exchange, Swan or River, preferably a Bitcoin only exchange, or you can get involved with the Fold app, which we'll discuss in detail next week. Second, you buy a hardware wallet, a passport, or a cold card. They're the recommendation of HodlBoomer and recommendation of the Bitcoin way. They're solid, they work. Then you follow the setup guide that comes with those things. Take your time, write down your seed phrase for a small amount of Bitcoin on a piece of paper for a second, not digitally, don't store it on your computer. Then you withdraw your Bitcoin from the exchange to the hardware wallet. You verify the address twice, just to be sure. And then you store your seed phrase somewhere else, away from the hardware wallet and somewhere securely. You can do this in a couple of ways. You can literally bang it into a piece of titanium, or you can bang it onto washers that you buy from the hardware store and store on a bolt. A lot of ways to do this. They're all over the place. But you store that away from the hardware wallet, somewhere safe. That's it. Now you're your own bank, literally. And the first time is kind of scary, then it gets easier. And if you start with a small amount of money, not your entire holdings in Bitcoin, then you're going to feel safe. Not your keys, not your coins. That's the truth. It's your keys equal your sovereignty. So let's review what we've talked about today. Every objection that we've covered comes from the same place. It's from the frame, the thinking, the feelings that come from the old system. Too late being the first one. It assumes that Bitcoin is a trade. Bitcoin is not a trade. It's an exit from the old, broken financial system. Don't believe me. Get on the web, look at it with a neutral point of view. Read The Creature from Jekyll Island. Read The Bitcoin Standard by Seyfedin Ammous. Read a book by Natalie Brunell, Bitcoin is for Everyone. There's a lot of places where you can go get the knowledge to understand what Bitcoin really is. The volatility, that's the second objection. It assumes that the alternative, that the dollar, is stable. It's not. Fiat dollars lose value by design. Read The Bitcoin Standard. Read The Creature from Jekyll Island. You will understand that. Third, if I have extra money, I'm going to put them in tech stocks because they beat Bitcoin. This assumes that you're looking at Bitcoin as something to trade. When you get away from that, when you think about Bitcoin as a means toward your own sovereignty, you don't worry about the trade value of Bitcoin, because if you're smart, you're never going to trade it for paper fiat dollars with no value ever. That money is going away. That kind of eliminates the, I need to compare this to stocks. Finally, self-custody, holding it myself, being responsible for my own money is way too hard. If you arrive there, if you stay there, you're assuming that someone else is a better steward of your money than you are. And if that's where you wind up, then that's where you wind up. And I feel sorry for you because you are capable. You do have the ability to store, secure your own Bitcoin and to become sovereign over time. So our answer to all four objections really is the same thing. Think bigger. This isn't about trading Bitcoin for dollars and dollars for Bitcoin over many cycles over time. It's about the kind of world you want to live in and the kind of steward of your hard money that you want to be. So I'm going to ask you a favor. If you have friends that are dealing with these very real objections, give them a link to this episode. Let them watch it. I mean, we're not highly produced. You know that. We're just a couple of normal guys who have figured it out. We're going to, in episode 6, and we hope you like and share so more people will get to understand this. We're going to talk about sound money, and we're going to talk about means of acquiring sound money. You can find us at hodlandtees.org. You can look at the links right there, or you can find us on X. You can subscribe to us on Apple Podcasts, on Spotify, at HodlBoomer on YouTube, at HodlandTees on X. You can find us on Nostr, at HodlBoomer. Please get the word out. Let's make this transition to sound money, and let's continue to stay humble and stack sats. We love you, and we'll see you later.